Welcome back to another episode of Business Journey Unlocked. Today I'm joined by Healy, founder of Healy Pre-IPO, a concierge broker service providing access to private tech stocks. She's closed over 600 million in pre-IPO unicorn transactions across companies such as SpaceX, OpenAI, Stripe, and XAI. Christine works closely with high net worth individuals, family offices, and funds navigating one of the most complex investment decisions. Christine, welcome to the show. I'm going to shoot it over to you to explain what you're all about.
Hi, Kevin. Thanks so much for having me. So, I see a lot of investors, a lot of them highly successful professionals. They might be business owners, doctors, lawyers, technologists. And for the most part, they're seeing the news cycles around SpaceX, rocket landings, or they're seeing ChatGPT be used more often, or they might be a daily user themselves. And they're wondering, why can't I get in on this? Why can't I have a financial stake the way that VCs and other insiders traditionally have kept the access amongst themselves? So that's where I come in. I help people navigate this very different investment market of private deals in companies that have yet to IPO, like SpaceX, like OpenAI, like Stripe, and really try and make that world of investing more accessible and easy and not as chaotic as it might be for someone approaching this bespoke type of deal for the first time.
It's very daunting, especially when you first get into it, because there's so much shiny objects everywhere. You don't know what may take off, what may not take off. A lot of people nowadays, they correlate this AI boom to how Bitcoin was. It's like either you're in or you're out. You're gonna either get an AI company or invest into AI. It's astronomical where everything's going, especially within this year. Because AI is constantly evolving every single day. So where it's gonna be 6 months from now is gonna be completely different than where it is right now when we're talking.
Yeah, and a lot of people are saying AI could be, at least in the investment world, one of the next bubbles because there's so many companies being funded to astronomical degrees. In the AI world, you're seeing seed stage companies, like early stage startups technically, raising at $5 billion valuations. So there's kind of an unprecedented phenomenon, I guess you'd say, within the AI space of massive fundraisings, companies gaining popularity and gaining valuation very fast. And logically, you can look at it and say, okay, well, not every single AI company is going to be this category
Mm-hmm.
winner. So some people are a bit skeptical and they're saying, okay, well, some are going to win, some are going to fail. There could actually be a lot of value collapsing in some of these that aren't the winners. So very interesting time for AI in particular right now in the investment world.
I agree. There's just so much noise out there. It's hard to distinguish exactly what actually would be profitable. But within your background and your knowledge, you actually would actually gear your clients towards the right solutions. You left your role as a portfolio manager to launch your own company. What specific problem were you personally solving over and over in your concierge corporate roles that made you realize this needed to become your own business?
The main thing is that I love working with clients and I actually love the deal making process and the actual work. So I think the issue is when you're in a really big company or you start leading teams or you're in some sort of abstracted role, it just takes you further away from the actual day to day of negotiating the deals and being down in the nitty gritty. So that's where I feel I can add a lot of value. And that's also very enjoyable to me working with people from all walks of life and walking them through this process. So I felt that's where I really shine. That's where I add a lot of value to my clients. And at the end of the day, I'd rather do that 10 times out of 10 versus standing in an all hands meeting or, all of the other bureaucratic elements that come in really any large organization.
I agree. I attest to that as well. Before I went into my company myself, I was also in the finance world. I was doing a lot of financial planning. I really enjoyed what I did. I brought a substantial amount of money within my organizations and I helped out a lot of people. And I just wanted to transition to something that would be worthwhile to me. my family in the future and my family now, and which is why I started my own company. So I'm pretty much in the same boat where you're at, just wanting to provide more value and getting more out of it instead of being in the corporate world, instead of being in the 9 to 5. It's hard to get out of it, but once you actually get out of it, you're like, oh, thank God I'm out of it.
Yeah, it feels great. And also, I'm a person, I think you as well, that has contrarian opinions. I don't always agree with what other businesses are doing in this market 100%, or I might have my own slant or my own intuition as to what clients really want or how to best serve them. And so it's so freeing to be able to follow through with a creative idea and see my view on this market, my take kind of come to life, and then seeing clients respond to that and having that validation. That's been really, really rewarding too, versus just following the kind of default way that people do things in the market.
And it's also just providing your framework as well. There's a lot of people that are just so focused on their go to market strategy before they actually execute. I mean, you already had the foundation, you already had the experience. It was easy for you to correlate that within your company. I've seen people that last years trying to figure out exactly their perfect go to market strategy. I'm like, you just got to do it. Like, you may have some ups and downs, but that's just the way of life, the way with business. You're gonna have good days, you're gonna have bad days. I'm assuming with what you do, you've had great days and you probably had not so great days. It just comes with it. That's just the way it is.
Yeah, absolutely. I do think setting out from the start to stay a small business, to take a more boutique approach versus raising venture capital funding, I did that intentionally. And part of that is so you can be more nimble, you can experiment, you can have good days, bad days, still stay on track. And you can build in a really kind of controlled and common sense way back to basic business principles and just try and build a better business each day than the day before. And that's been really nice. I think when people are in the mindset of, I'm going to be a scale technology company, whatever I'm doing, I need to do it turbo mode. I need to go into hyper growth. I need to scale. I need to take over my market and be a $10 billion company, or I bring in all these VC investors. That's when it becomes really difficult, because I think you have to think about decisions on such a broader scale. There's also trade-offs when you're pursuing that kind of scale. So trade-offs including quality of service or personal attention or profitability at times. And so I was kind of consciously trying to avoid that trap of answering to 100 different people and then losing focus on the people I'm really trying to serve. So I think that's nice as a small company.
Well, there's a difference between growing strategically and then growing just to grow. If you're just in the mindset of growing and expanding as quickly as possible, what's going to happen? You're going to fall through, and eventually the business is going to crumble if you don't have the exact frameworks, policies, procedures, automation, let's say, in place, right? Because you can take so much work, but if it's only you or, a couple other people, it's going to be very daunting. And then you won't be able to do it as best quality as you did, as you briefly mentioned, as you were before, focusing on the people that are actually going to make a big impact, or how you're going to make an impact within their life.
Yeah, I've seen phenomenally profitable companies within the private markets make that decision to go for hypergrowth and essentially end up driving their business into the ground, at least in terms of profitability and things like that. So, so it's a weight off my shoulders, not having to deal with VC investors and all of that extra stuff, and just focus on what matters.
Yeah, I mean, especially in your line of work, shortcuts are always tempting, especially when deals move fast, valuations shift. I mean, given your experience, what you had with the 600 million in pre-IPO transactions, specifically for you, what's one principle you refuse to compromise on when helping clients access those private tech stocks, even if it might slow down the deal or potentially cost you a transaction?
On a personal basis, integrity and caring about my clients. So some brokers are maybe a bit greedy or just trying to have the short-term wins, because for some of these deals, especially if people are dealing in extremely large deals, there could be maybe an incentive there to cutting corners, or just, I don't care about this client in the long run, let me just get this one deal closed, and who cares if I never talk to them again. And that just doesn't compute with me. I love to play good cop. I love to serve my clients. When my clients win, I feel like I win. That's my happiest day, when my client is just thrilled with my service. and I'm thinking more long term. How do I get clients that are going to do 5 deals with me, or going to make a referral to me? That's great, and I never want to sabotage that by taking a short term win at the expense of my client and what's in their best interest. So I don't sacrifice my integrity and being actually honest with my clients. That's really important to me. And then on a more kind of commercial level, just being thorough, going through all the different details of a trade. I think that's so important because there have been so many times where that's where we catch an issue that would have tripped us up later, or a fee that actually we can negotiate out and save money on, that type of thing. So it's always important for clients to be active in their own due diligence. But as a broker, I have a lot of experience going into the weeds, and it can be quite useful when you're negotiating to go beneath the hood and actually understand the fine points of a transaction.
It also comes down to, how much do they want to be involved with it as well. I mean, you mentioned they need to do their own due diligence. Also, it's putting less weight on you, but also making sure that they're also involved within making a viable solution. Because there's a lot of people that just say, "All right, go for it," but it depends on exactly who the clientele is. If it's somebody who trusts you, then they might give you all the weight that you can bear, but it might be more detrimental to you in the long run as you start to scale, as you start to get all these clientele, because then you have to really focus on what's the impact I'm doing here? What exactly is the right move? So stuff like that might be a little more daunting in the beginning, but it's just you keep on going. As long as you're transparent and open with everybody you're involved with, that's the best you can be. And if you make a mistake, then you tell them. There's so many people that try to hide everything just to make themselves look good, make the company look good so they can still keep the client, but something like that, you're just biting your head off at that point.
These pre-IPO deals are incredibly complicated. They may look easy from the outside. They are absolutely not easy, and there's a big spectrum of pricing, a big spectrum of different structures, and a big spectrum in terms of deal reliability and what can actually close and what cannot. And so it's really important to work with someone that you trust, not just go with an offer on face value, because if it doesn't close and you're tied up a few months in that deal, you might have been better off skipping that and pursuing something else. So it's really important to be discerning, especially when we're talking about private illiquid stocks that are inherently high risk compared to a lot of other investment types. So quality is very hit or miss. You got to use common sense judgment, and also to remember that brokers are not actually fiduciaries or advisors, and so we're not actually supposed to tell you this is great, this is an amazing investment, you're going to get X returns. And it's really a red flag if a broker is pushing too hard. They should be there to help you source deals, to help you understand them, compare, negotiate, smooth everything out, give you really the tools to make a decision. But if a broker is pressuring you too hard, that can be a sign that maybe they're not the most most credentialed or proper actor in the market, and to be aware of that. And one thing you can do off the bat is to Google FINRA broker check and look there in the name of your broker. You can type in Christine Healy, for example, and at a baseline, just check if they're licensed in good standing with FINRA, and that's a good filter off the bat.
I find that within any niche, any organization, there's bound to be some bad apples, and within those bad apples, it kind of taints the whole market. But that's just a way of life with a lot of stuff. If people are only thinking about themselves, then it's gonna bite them in the end. And then again, it points a bad kind of condensation on like what you do, because you truly enjoy what you do. You truly enjoy giving back, and it is a little daunting to also think about in the back of your mind that these are people's livelihoods. They're lifetime investments. So you have to make a practical decision based on the data and everything that you have before you go into everything, because it may look great as it is today, but if you don't actually do your due diligence, if they don't do their due diligence as well, what's going to happen? They're going to lose everything.
Yeah, it's so important to realize that these are at times very large transactions. The minimums for deals I work on are usually $50,000 or $100,000 per deal, occasionally higher. So it's a very real amount of money, no matter who you are. And for that reason, I always encourage clients to be really active, know what they're buying into, or if they're going into some sort of fund, know who the fund manager is, and make sure you have a good rapport and know who you're going into business with. Know me as well as you can, and know who you're going into business with as a broker with me. All those different things, because you're putting forth a material amount of money in a high risk illiquid investment that you're in potentially for a very long time. And you'd be surprised how often clients, unfortunately, have said, "Oh yeah, I bought this SpaceX through someone else. Okay, what was the structure? I'm not sure. Okay, what was the fee structure on that? Are you going to owe any profit share or carried interest at the end? Oh, I'm not sure." And that's alarm bells to me, and I try to make sure that never happens with my clients, that they know what they're buying. That's so important. Or they could get into trouble, I could get into trouble, and just first principles basis, I want to make sure that it's all transparent before they go in.
Exactly. And going back to what we spoke about earlier, they like to see the shiny objects. They like to see SpaceX, ChatGPT, OpenAI, all those good markets where they are right now. But you don't know what could happen. Like, what's the free structure? What's all the structure? If they don't know, then why they even go for it? They just went for it to go for it. I mean, as I mentioned, there's so many companies that see all this AI and they want to grab as much. They want to get AI just to get AI. But how's that actually going to provide the ROI back to you, back to your business? If you're just getting that for the sake of it, or if you're just getting stocks for the sake of the name, how is that going to benefit you? You may make some win, you may make some loss, but it's not as strategic as if they were with you within your company.
Yeah, I love it when clients have a very clear vision of what they want to invest in, where they have a really deep knowledge in one industry or another. Maybe they really want to invest in SpaceX because they have a very clear vision about the future of that company. It's a company that excites them, that inspires them, that they really, really believe in. And that's always nice versus the occasional prospect that's just following hype or doesn't really have strong conviction. That's maybe not ideal, because there have been companies in this asset class that had a lot of hype at some point and then failed, or something went wrong, or they got liquidated. So WeWork was one of the active companies at one point on the market. Didn't turn out so great. FTX was active at one point in this secondary trading market, completely collapsed. And so it's important to know who you are as an investor, what your needs are, what your priorities are from one structure to another, one company or industry to another, and really invest according to your own needs and your own investment principles, obviously with the support of your broker, because you're playing with fire if you don't.
Based on the experience you've had within your market, what's one shift that you think investors are underestimating right now within the market? And what do you think would be an uncomfortable move that they should be making within the next, let's say, 12 to 24 months?
Such an interesting question. I think the market in general is becoming oversaturated. More people are learning about this market, more people are paying attention to it, which is probably a great thing in and of itself. I feel very strongly about increasing access to this asset class for more people, not just those billionaire insiders or venture capitalists. So more access is great, but the flip side of more access is this spectrum of quality among people that come in. There's a lot of people that are new to this market, don't have the best or the deepest experience trying to go be a broker to get in on the action, or unlicensed people trying to connect buyers and sellers together. And even if they're licensed, bigger platforms, more new companies popping up trying to be these big businesses within the private markets. So because of that, I think it's more and more confusing for investors, particularly individuals, particularly folks who full-time work in medicine or real estate or something completely different, or especially first-time investors. And it can be very overwhelming with all the marketing for one platform versus another, or you're getting an offer for SpaceX coming through your inbox cold and you don't know if it's scammy or not. It's a really it's a really tough time because there's a dynamic where there's probably more interest in pre-IPO companies than we've ever seen, but probably more analysis paralysis and chaos and lack of trust than we've ever seen. And so that's a tough one to navigate for people that clearly see the opportunity but don't know the right way to go about it.
It's just filtering out the noise, trying to see what the unicorns are, what the gold nuggets are, what's actually legitimate within the market. I mean, there's so many startups, as we talk about, there's so many startups that are within the market. It's very hard to figure out what actually would be a viable solution. And that's just going back on the data, the patterns, the analytics stuff. But people are hesitant, as you mentioned, with analysis paralysis. They're hesitant to actually get into this field. And if they don't get into the field, it's more of a regret. With anything in life, it's all about taking risk. If you don't make money, then you don't make money. It's all a learning experience at the end of the day. If you're just so focused on and attached to the monetary value or the outcome that you're getting from it, you may not actually be worthwhile to actually find out what the solution is, which is why it's so good for brokers like yourself in the service, because you don't have emotional attachment to this. Even though it's strategic, you think about it strategically, there's no emotional attachment to it, so you can actually go in with a fresh set of eyes, fresh set of ears, and a pure heart to actually be able to figure out what's best for your client. And that's what I like most about people within your kind of field.
I definitely get attached to my clients to a certain extent, but I try and not be so attached to the deals themselves, because it is important to see them for what they are. Or a deal that looks amazing at face value could actually be really hairy and problematic. Or a deal that seems really hairy and problematic could actually be a really fantastic deal if you figure out those details and mitigants. So it's important that not everything is as it seems. And as much as I fight for my clients, I want to see them win, I have to go into these negotiations and these deal settings, with my logical, analytical hat on, and not my personal or soft skills hat on to the same extent as the chats with clients. I'm always trying to connect with my clients, really, really understand them, and then when we go into these negotiations, it's the analytical hat and playing hardball and trying to get the best deal possible.
With starting this podcast, I've had a lot of CEOs, founders, operators come on, and all challenges kind of boil down to a couple key areas. You're talking about sales, lead gen, fulfillment, and delivery. You launched your company September of 24 as a concierge service. Coming from like a business perspective, what's one area you're looking at to fix within this year, whether that's on client acquisition, the side, the deal sourcing side, or even scaling your operations while maintaining that high personal touch that you have within your business model?
Probably scaling the operations, but in a super disciplined way, because it's very important to me that I don't overhire, start having to spend a lot of time managing a bigger team than I really need, because again, that detracts from the time I can give to my clients and to the deals. And so it's about what resources or what key hire do I possibly make that allows me to 5x the business or to have a giant impact with as few additions really as possible. And so one of the biggest things I've realized since starting my own business is those trade-offs of where you put your time, where you put your capital, where you put your energy, and how to balance between short-term wins, what's going to pay the bills next month, especially as a broker, because there's no recurring revenue. You have to keep doing deals to get more money in, and balancing between the immediate revenue generators versus long-term relationship building, marketing, brand awareness, and projects that might be bigger long-term bets but not have an immediate payoff. So you have to really get those bets right when you're building a business, especially as a quasi-solopreneur, because if you spend a chunk of your time on a project that isn't going to materialize or be impactful, that's money essentially that you've lost, because that's taking time away from the revenue generating portion of the current business. So you have to be so disciplined, I think, with yourself and the choices that you make. So I always say it's almost like therapy on steroids because you have to really know yourself, know your patterns, try and optimize the way you think about everything. Think about risk, think about planning, think about working as a team, working solo, all of those different things you have to be aware of to make sure you make the right decisions amid these trade offs.
There's so many people that enjoy the concept of being their own boss, but once they actually see what goes down into it, all the discipline, all of the days where you don't want to work but you have to work, like it just comes down to being strategic. Time is money at the end of the day, as you mentioned. If you're not being strategic, if you're not being disciplined, then what's going to happen? The business isn't going to flourish. I mean, you clearly see it within yourself. I mean, you've been doing this for going on 2 years now, right? If you didn't have the discipline, if you didn't have the strategic mindset, then you wouldn't have made all these different unicorn transactions, right? It really shows the drive and dedication you have, not only within your business, but for the clients you serve as well. And I think that's a very big prominent proponent as to where you are right now. And I think that's beautiful.
Yeah, I mean, I've loved being a solopreneur, being independent the last 2 years. And part of why I love it so much is that before that, I spent around 6 or 7 years doing the same type of work, pre-IPO deals, but at much bigger companies.
Mm.
And so the contrast is stark. There's pros and cons to the safety and the infrastructure of big companies, but there's also big advantages to doing it your way and being entrepreneurial. So it does depend on the type of person. Some people would hate this type of lifestyle or this type of work, but if you're that person that has that internal motor that's just propelling them towards the next thing and making them really, really have the drive to build. And if you can deal with the ambiguity and the risk and the uncertainty, then it's so rewarding, really, to set out on your own path and to have real direction and agency in how you spend your time and the legacy, I guess, that you're building over time.
Exactly. You are not only building yourself, but also building your brand for your company as well. I mean, what we do at the end of the day, it's not for the faint of heart, right? So it just depends on what exactly are they willing to do? What exactly are they willing to sacrifice in order to make it big? A lot of people have average lives. And what's going to happen if you don't really put yourself out there, if you really don't put that risk, then you won't know what happens. And again, as I mentioned, if it doesn't work out, it's a lesson learned. You can go on to your next business. I've had people come onto the show that are on their fourth or fifth business. They learn something each time. They didn't give up. So many people, especially in my generation, are so very easy to give up when it gets hard. But that's just life. It's going to get hard at the end of the day.
Absolutely. I also think we're at a really interesting point of time. I know this is true in my industry in pre-IPO investing, probably true in a lot of other industries, I think. This dynamic that there's more and more tech solutions out there. There's more and more AI slop. There's more and more maybe corporate shortcuts or efficiencies that are really taking away the human element of a lot of businesses. And I think we're getting to the point where people are realizing they maybe don't really want that all the time, or they're really missing a human approach. And with that, as these technological advances proliferate, there's also an opportunity in many different industries, I feel, to just simplify things, provide a completely alternative service. Okay, instead of outsourcing a customer service agent around the world or a AI robot or whatever, just have a human person on the phone that knows the business really well and can answer questions directly. Or do you really need automation and a really technology driven platform? I think, especially in the world of pre-IPO deals, you really don't have to reinvent the wheel. People are gonna latch onto a service that's reliable, that's honest, that gives them a good feeling, and that serves their interest, and ultimately that gives results. So I think there's a big opportunity in many different business fields right now to just be old school, provide a good quality service, and in some cases, doing it the simple way and the quality way in and of itself is going to differentiate you from all of these other businesses that are becoming more and more automated and impersonal.
I agree. And, given my field as well, there's so many people that I know just try to get AI for the sake of AI. I mean, you see what Amazon did a couple months ago. They fired, believe, 36,000 people, if I'm not mistaken, for all this AI development that they have within their organization. The biggest thing I always enjoy prefacing is AI should be amplifying your business. It shouldn't be taking away from these people. I mean, for example, if you want to get an account manager, there's AI agents that are out there. Or you can get all these AI agents within your company and have people actually in the back end doing it instead of firing Timmy or Johnny because they're not doing so great. Why don't you just try to transition them into what would be beneficial for them? Maybe doing this whole development for the AI agent, or simplifying certain stuff. I do agree that there's all this AI slop out there, and sometimes being simple is better. Simplicity is key in my opinion, but given on the advancements that we're having, the technology, the technological complexities that are still out there, you may need it in some places and you may need not. It just depends on exactly what is truly viable, what's actually the prominent ROI when we actually strike down everything. And I think that's the biggest thing that a lot of people fail to realize. They just look at it again as just a shiny object, not actually what would be truly beneficial for them and for their company.
Put it this way, if you actually put yourself in the shoes of an investor, that small business owner that's looking to build generational wealth, get started in this new investment asset class, maybe they're putting $200,000 or $100,000 into their first pre-IPO deal, a SpaceX or a Stripe. Are they going to want to interface with a AI-driven platform with all the bells and whistles and, it's a bit glitchy. Oh, well, I'm sure it's fine. Are you going to want to do that for your $200,000 deal that you're already a bit anxious about approaching? Or do you want to talk to an expert that has your back and has been doing this a long time and is going to literally be there on the phone with you answering your questions? I don't feel like the AI and the tech is at a point of nuance, a point of good judgment in these really delicate scenarios where I would personally want to put my wealth in their hands, really, for transactions of that size. So I think that's a dynamic right now that some of these much larger VC-backed companies are maybe missing the point on a little bit.
It just, at the end of the day, it's just connecting with people. There's a lot of people nowadays that just want to send emails. Like, why not just pick up the phone? Just pick up the phone and call them. That's why we have phones. If we didn't have all these social media or emails and everything, it would be great. But given where we are right now with all this tech stuff, it has separated us. It has put a barrier. It's hard to get that human connection as it was, let's say, 20, 30 years ago. It's not the same as it once was.
Absolutely. I think people need human connection, especially in these much higher ticket sales. I think people need the basics, the fundamentals to be there, a reliable deal and a broker with integrity, clear deal terms, an experienced fund manager, whatever these things are that they're looking for in a deal. Usually that's much more important to people than on-platform document signing. I don't really care as much about that as an investor. You want to send me a DocuSign? Sure, let's do a DocuSign. Fine. I don't care about the platform experience. I'll sign your ad hoc DocuSigns all day long because I just don't care about that as much as I care about the other pieces, like my deal terms being good or just the basics. So I think you can differentiate a lot just by doing the basics right.
Exactly. And you've advised investors and clients where the downside might be real. I mean, hypothetically speaking, if there was no clean data or secondary market pricing or even no safe option, for you personally, what decision do you personally trust most when guiding clients through their pre-IPO investments?
Occasionally it can be tough because, again, I'm not an advisor, so it has to be their decision. What they buy and what they don't. But even as I'm filtering what I see in the market to decide what to even show to clients or helping them compare offer A versus offer B, I do have to use a bit of discernment and just knowing what's worth even spending time on as a broker versus what is just market noise. There's a lot of buyers and sellers in private deal making that are just fishing, or they're going to see what the price is to mark their existing position, but they're not actually serious about transacting. So myself and really any broker in this market, we're flooded with all types of different buy and sell orders for different companies, literally all day long, 7 days a week. And so, well, I'm not going to cherry pick a deal and say some investor should buy this because it's a great stock. That's more maybe an investor role or an advisor role, not a broker role. I won't do that. But if I'm seeing hundreds and hundreds and hundreds of different deals, I still have to have a good intuition for which ones are more real, which ones are going to be attractive to my clients based on the interest that they've been telling me they have, and that type of thing. So as a broker, I have to be very discerning as well. And that's really from experience, just having a great BS detector and to interpret all these deals that are coming in quite quickly and to know which ones are worth pursuing more.
Exactly. It's hard to distinguish at first glance what actually would be the prominent solution, the prominent, what's the end game with everything? You got to think about that. What's the client's end game? It's always point A or point B, or there might be even point C and D, right? It just depends on exactly what they're looking for within the market. That's the biggest thing. Before we wrap up here, if you can give yourself one piece of advice when you first started your business back in 2024, knowing what you know now about building a brokerage service within your own business, what would it be?
Maybe just don't worry about it so much. I'm always going to be an obsessive person. I love what I do. I've got that internal motor. I'm very driven, but just especially when you're already taking a leap of faith and becoming an entrepreneur, trust yourself, trust in the reasons why you made this move. There were reasons you made this move. And just the faster you can learn to trust your intuition and your business instincts, I think the faster your business takes off. So that's been one of the most fun parts about this, getting to know myself even more and honing those insights and trusting your gut and just to enjoy the process.
There's so many people that look at the negative attributes within being an entrepreneur and starting a business, but if you always think about the negatives, you're not going to go far within life or within your business. I find that as long as you're having fun, the money will come. If you truly enjoy what you do, the money will follow you, but there's so many people that just start businesses just to get money, go on to the next client, go on to the next customer, and like, what exactly are they truly building? Are they trying to build a money-making machine, or they actually want to have a viable solution, viable change that they can put onto other people, other families? And I think that really goes down to who exactly they are and who they want to become, and that's the biggest thing.
Yeah.
For anyone who's listening or watching this and want to maybe learn a little more about you, get connected with you, with Healy Pre-IPO, what's the best place for them to reach out to you?
You can find me at Christine Healy on LinkedIn, and you can go to healypreipo.com. That's HEALEY, pre-IPO.com. And you can look around a bit, learn some more, and also get on my mailing list where I send free information just so you can get your feet wet with no commitment.
Beautiful. Awesome. Well, Christine, thank you so much for coming on. I appreciate it.
My pleasure. Thanks so much for having me, Kevin.